Hello, this is Brent Gregory, and I'm here to answer a very important question for you. And as you can tell, the question is, what is a debit? Or more importantly, let's think of this question. What is the role of a debit? So I will explain a debit to you by providing you with a step-by-step guide to write a journal entry. So we'll go to the journal, and here's our example. The transaction was, let's say on the 1st of the month, you paid an account for $200. So what is step one in writing this journal? Is to identify the debit part of this transaction. And to do this, you will ask yourself 4 questions. Let's think about those questions. And that's this. Is there an increase in an asset? And you think about that. And we see in this case, we've paid an account payable, which is a liability, for $200, so our cash at bank has fallen, so there's no increase in an asset. Is there an expense? Well, there may have been expense to get the account payable, but this transaction, there is no expense. Does the transaction indicate that the owner has drawn money from the business? And well, clearly that's a no. Or finally, has a liability reduced? And we can see, yes, an account payable, a liability that we owed money to someone, and now we've paid $200 of that, so an account payable has reduced. So that is our debit entry in this journal. Account is account payable. Posting reference we don't have as yet because we haven't posted it, so the debit is $200. Now we need to work out what is the credit part of this, and I guess that is pretty obvious, but we'll just go through the steps anyway. So we ask the question, and it's almost the opposite of these, and the questions would be, is there a decrease in an asset? Well, there is. We've answered that straight away because we know there's cash at bank is reduced $200, so that's our credit. Now, what would the other questions be? Well, is there an expense? Would be, is there a revenue item? Has the owner drawn money from the business? Well, the other side of that, and I won't write it in, but has the owner put money into the business? And finally, has a liability increased? So let's do this with another journal entry, the opportunity to test yourself again. So what happens? Well, we saw the first journal entry, paid an account payable of $200, so that was a debit to account payable of $200 and a credit to cash at bank of $200. The next one, earned $500 revenue, paid in cash. So remember the questions. Is there an increase in an asset? Is there an expense? Has the owner drawn money from the business? Has a liability reduced? And we know here, well, there's been an increase in an asset. What's that asset? The cash, or our cash at bank. So the debit is cash at bank, $5,000. And the revenue item, and the credit item is revenue, we have revenue of $5,000. So let's look at the key learnings from this. We use a debit entry to indicate that we have an increase in an asset, incurred an expense, or the owner has drawn money from the business, or finally that we've reduced a liability. And so also from this we have learned that our debits come first, our debits are on the left, and though we didn't specifically address it, we can now see that the following accounts have a normal debit balance: assets, expenses and drawings. Thank you.